What are the primary risks that may keep you up at night and may move your investments into gold?
Well, I think, a primary risk for me would be the overvaluation of, in particular, tech stocks, right? Just the where the market in general has gone is so strong. I'm a bit contrarian. I think it's time to move into a metal like gold or gold stocks because of the torque that you'll get or the multiple. I think they'll rise faster. So I look at that, and then of course, I believe that the world today is a pretty turbulent spot with a couple of wars raging. What's going to happen in Taiwan? A lot of speculation there. So the safe haven play, but I think it's time to move into a gold stock.
Scott Caldwell joins us today. He is a CEO of SolGold, ticker SOLG on the Toronto Stock Exchange. We'll be talking about gold and copper, as SolGold is well positioned to be discussing both of these metals. Scott is an executive in the mining industry, and he's had decades of experience. We'll talk about his experience and his outlook for these metals, as well as his projects in Ecuador. SolGold is mining or is involved with both copper and gold. So welcome to the show, Scott.
Thank you, David. It's great to be here.
We'll talk about gold first. I think investors want to know whether or not this recent rally is sustainable, but more importantly, what has driven this rally, given that in the past, if you look at the gold price performance, it's been negatively correlated with risk appetite. Risk appetite has been good the last year. Stocks have risen to all-time highs. Bitcoin has gone to new all-time highs, as you know, and the interest rates have still remained high. All these factors have traditionally weighed down on gold, yet gold surpassing $2,000 multiple times this year. We're well above $2,150 today as we speak. So what has driven this rally?
Yeah, it certainly, like you say, it's an interesting set of circumstances with the stock market, et cetera, being so strong. But I think just the turmoil in the world today, whether it be Ukraine we want to talk about and or the war in Gaza, I believe that it's still a safe haven, and people are moving into gold. That see a store of value for a very interesting time in the world today. So that's what I believe is going with gold. Do I think it's sustainable? Yes. I think that people move into it as a safe haven to go to, and I'm excited about the rally in gold. I've been a gold bug my entire life, basically. So I believe in gold as a store of value, despite what the other instruments are doing.
Okay, so can you elaborate on your thesis in a bit more detail for those of us just learning about gold as an investment? You said you've been a gold bug your entire life. What to you is the value proposition of owning gold?
I look at gold. Again, my value proposition is a true hedge against inflation, and as you mentioned, inflation is under control, but it maintains its value, and over the years, it goes up and down, but you buy gold and it retains its value. So I look at it as a store of value and a safe place to go, right? It's so as in safe as it doesn't disappear, right? An ounce of gold is an ounce of gold, and there's a limited amount of gold, right? If you look at the demand for gold and the supply, I think that the demand, whether it's because of my theory or otherwise, is going to outstrip supply. So I look
from the industrial side or the investment side?
The investment side. I believe the industrial side is not as significant. We're going to talk about the next metal, of course, copper is industrial, but so an investment as an investment vehicle, not as a material for industrial.
Okay, so your thesis for owning gold today is heightened geopolitical tensions, run to safety in today's environment. Is that your case here?
Yes. That would be my case.
Now, for a miner, 2150 is certainly an exciting price. Have you seen a shift in sentiment towards mining as an investment vehicle or asset class, if you want to call it that, because the price of gold has risen above 2,000, or are investors not yet fully invested mentally?
I don't think they're fully invested yet. I think the share price are, just the stocks that I own, gold mining stocks, and it's besides SolGold. I own a bunch of SolGold, but other gold mining stocks, they just haven't responded yet to the price. So I think it's a good opportunity to invest in gold shares, gold stocks. I don't think they've responded to this gold price, right? So I think it's behind the curve.
Skeptics of the gold mining industry would say, look, if the underlying metal has risen and in fact outperformed the stocks, well, the stocks clearly must be a value trap. How would you respond to that criticism?
I think that I can hear the criticism, but I believe that you still get the torque or the leverage by owning the stock, and I think it'll respond. In other words, the gold price goes up, and the stocks will respond in a more favorable manner than the price of gold, i.e., rise higher and faster. So I think you get that torque and that leverage, and I just think it's behind the curve right now. I think you'll see that with the gold mining stocks sometime in the near future.
I know you're not a senior producer, but just as a point of reference, how are the producers, the seniors' margins doing at 21.50 an ounce? Are they expanding their margins, or are they not managing their costs properly?
I believe the companies I own their stock in, they're expanding the margins. In other words, they've done a good job, and that's why I bought the stock, right? They've done a good job in managing their costs, managing both operating and capital costs, and their margins are increasing on a per ounce basis because of that management.
We'll talk about your company in more detail, but just for the audience to understand, a miner's income statement, what would be their primary or biggest cost or line item on their costs usually?
If you looked at, it depends on the company, but in general, if you look at a mine and you go down to the detail, is energy, labor, and then you get into other consumables. So it depends what country you're in. Labor can be your number one cost. And so that would be your number one cost if you're like running a mine in the United States where labor is quite high. And then it's energy, which might be electrical, fuel, whatever you want to throw into energy, but that would be your number one too.
So just based on the statements, with the financial statements that you've researched, do you think that part of the reason the mining industry has been underperforming the underlying metal is because some of these companies have experienced higher costs due to inflation, higher labor, higher energy costs, for example, and that's worn down on their bottom line?
Yeah, it would be, especially when if you go back a couple of years when oil was around $100 a barrel, right? But today oil is down a little bit, so the cost of the petrochemicals is down. But the companies I own have done a good job at managing those costs or keeping them flat. How's that? Inflationary pressures have backed off, and so with the gold price moving up, their margins are increasing.
Obviously, nobody knows for sure where the price of gold is going to go. But if I were to ask you, Scott, at what price do you think it would take investors to be really interested in this sector? Do you have an idea? Have people approached you and said, "Look, I really wish gold were, I don't know, $2,500, then I get it." Have you had these conversations?
I've heard a lot of people talk about it, and 2,500 has come up a number of times in people's conversations as that's the price that is going to look really attractive to people, i.e., then the miners look better. I think it's pretty darn good at 2,100 or where we're sitting at right now today. So I'm happy with the price today with the companies I own.
You're right. 21 does look good because it is an all-time high.
Yeah.
I mean, are you surprised just from an investor standpoint that the industry isn't taking off in terms of investors' interest, despite the fact that gold is already at all-time highs? I mean, what else do you need?
That's exactly right. Yes, I am surprised. And as I mentioned a couple of times, I do own gold shares, and I'm surprised they haven't moved. I think they will. I think they're going to move. I think people are going to wake up. Investors are going to maybe rotate out of some of the tech stocks or something and move into gold, right? So gold stocks. So I think they will take off.
CNBC, in an article recently, called gold a doomsday investment. Now, whether or not you agree with that sentiment, it's a bit harsh, but I understand where they're coming from. It's a safety play. So I'll finish off here. We'll move on to copper. If you look around the world, what concerns you the most? In other words, if you just observe from an investor standpoint, what are the primary risks that may keep you up at night and may move your investments into gold?
Well, I think, a primary risk for me would be the overvaluation of, in particular, tech stocks, right? Just the where the market in general has gone is so strong. I'm a bit contrarian. I think it's time to move into a metal like gold or gold stocks because of the torque that you'll get or the multiple. I think they'll rise faster. So I look at that, and then of course, I believe that the world today is a pretty turbulent spot with a couple of wars raging. What's going to happen in Taiwan? A lot of speculation there. So the safe haven play, but I think it's time to move into a gold stock.
All right, let's talk about copper, the other side of the equation for SolGold. I have here a research report by S&P Global Market Intelligence, dated a couple years ago. And now I just want to see if some of the statements made in 2022 are still
Certainly.
relevant
Yeah.
today. So this is the overall take here. It says the short-term outlook is set within a global macroeconomic environment that is strained by high energy prices, rampant inflation, and the increasing likelihood of recession, at least in some key economies. Longer term, the energy transition will drive consumption growth, led by the U.S. as demand from projects initiated by the Inflation Reduction Act of 2022 materialized. So again, this was written 2 years
Yeah.
ago in 2022, but they're talking about longer term fundamentals for copper. Do you agree with that take?
Yeah, I do agree with that prediction on what's going to happen with copper in the future. China, the economy in China has not fully recovered yet, and so their demand of copper or their use of copper is not where people expected it to be. So when that starts to take off, I think copper will go. The demand for copper, the use of copper, will start to hit the predicted curves.
Uh, $4.12. That is the current price in US dollars. Now, the copper price has done quite well over the last year. Year to date, it's up 6%. Over the last 5 years, it's up 45%. Give us a key reason as to why copper rallied 45% over the past 5 years.
Yeah, copper, if you look at the supply demand curve of copper, and we touched on China, but the demand, the supply is dwindling, right? There's a huge gap between predicted copper usage and actual production. And so that gap is continuing to grow. And the decarbonization of the world will start to use even more copper. So it's like you say, it's risen quite well, and at $4 a pound, that's a pretty darn good price for copper, in my opinion. That's you're starting to really get to where some companies are going to generate some real revenue off of these kind of margins at that price, right? So I think there's some great investments in copper stocks, and I've got a couple that are my favorites. One being SolGold, of course, but at any rate, I think the demand for copper is there, and it's very real. So I think it's going to continue to rise, the price.
Give us some key industrial uses of copper today that are relevant.
I mean, key industrial, it's used in everything. Copper connects everything, right? So you're building a house, the wires inside the house. Cars, automobiles use it, and of course the EVs use several times as much copper as a conventional petrol-powered car. I've read some things about EV production not hitting what the people were predicting, i.e., the demand for electric vehicles aren't there. But copper is essential to solar. Every solar field you see, the panels are connected by copper. So it really is the metal that connects everything. And so if you build a building, you're going to have a lot of copper in it. You build a solar field, it'll be copper. Wind turbines, transmission lines. It's essential for the growth in economies and any sort of construction work and energy, right? So the transition to green energy, copper is going to be a big metal that you're going to need for that transition. So we're excited about where it's headed, and we like the future of copper.
You mentioned the slowdown in China. Let's talk about that first. Does that concern you? The China growth story since the early 2000s has been a predominant driver of all base metals, not just copper.
Yes.
But like you said, the economy is not growing at the same pace as it once was 20 years ago. And in fact, the economy is facing several challenges internally. Does that not put a dampen on demand and perhaps the price long term?
Yeah, China's slowing, but I think definitely slowing. And of course, but I think that the demand in China for their export industry will increase, will recover. But if you look at India and some of the other large countries that are starting to and in Africa starting to consume copper, and so I think the demand's going to be there for copper, and very excited about it. But yeah, China has slowed, but I think there's going to be other countries that will fill that pipeline with demand for copper as they change their economy.
It's often referred to as Dr. Copper. It's used as an indicator of economic growth, and so when the copper demand decreases, usually it portends slower economic growth and vice versa. So what do you make of the price today at 412? US, it's grown by about 6%. It's been flat pretty much all last year, up and down 5%, give or take, over the last 12 months. When you look at that kind of price pattern, do you think to yourself the economy is flatlining because the copper price has also been flatlining?
Yeah, you're right. Dr. Copper, it is an indicator when you look at the price flat, you could say that. But I look at a $4 copper price and I look at our deposit and others in the world. It's a very profitable, $4, you make a lot of dough, you make a lot of money. And so it's a price that, it may be somewhat flat, but that price is very profitable for a lot of companies.
Is there a break even price for producers of copper?
Yeah, it depends on the producer, of course. If you look at our deposit, we'll make, because we have such a high gold credit, we're not producing now, but our break even cost is less than a pound of copper, so $1 per pound, so less than that. So, but that's because we have a large gold credit, and there's mines around the world. Freeport has a Grasberg mine that produces it even lower cost than that, and so when I talk about break even, I'm throwing all costs into that. What's it cost a company to produce a pound of copper through market, i.e. through the smelter? So, but our costs are quite low because of the gold credit.
Your deposit is in Ecuador, and I want to talk about your deposits and Ecuador just a bit. But here I have a table showing world mining production of copper by country as of
Yes.
2022. Chile is number one. About 24% of the world's copper production is based in Chile. Number two is the DRC in Africa. Number three is Peru. Number four, China. Number five, United States, and then Russia, Indonesia, and other countries.
Right.
Why is it that South America is so dominant in the copper production arena? Is it because of purely geological facts, or is it because the government has done something to incentivize more production?
It's geology. If you look at, you started with Chile, all the way up through Ecuador into Peru, into Colombia. So Chile, Peru, Ecuador, Colombia. It's the copper belt, and it's where the largest deposits, some of the largest deposits in the world have been found. Chuquicamata, Escondida. And then you just work your way up, and the rocks, if you'd like, that contain the copper, and porphyry copper is what you want, which is a disseminated copper deposit. They're large and consistent, and so obviously bigger and high grade, so high value makes a lot of dough, a lot of money. And so it's the rocks. They're the same rocks in Ecuador as they are down in Chile. They've been, the weathering, if you'd like. Ecuador gets a lot of rain, and they're newer. The rocks aren't as old, but they're the same. And so it's the geologic potential. It doesn't stop at the border. And Ecuador has been underexplored over the years. And right now, there's only one large copper mine working in Ecuador, and it's an open pit mine called Mirador that's in the southern part of the country. So it's the rocks, it's geology, and Chile, because of the arid climate where most of these deposits have been found, it's easier to find the deposit. Right, it's not covered with trees or with vegetation. And you go further north, you get into more of a place where you've got forest and vegetation, and you can't see the rocks, right? Like BC, you can't see the rocks; it's covered with forest. And so here in Ecuador, it's some very, very, very prospective geology for porphyry copper deposits, porphyry copper gold deposits, like we found. So it's geology.
Okay. At the end of April 2023, Chile's president at the time, Gabriel Boric, announced a nationalization of some of its lithium reserves. So nationalization is a concern for some investors. Is that a concern for you operating in Ecuador?
No, Ecuador, I believe Ecuador well, I don't believe, I know it's open for business. And the current administration, led by President Noboa, sat through a number of presentations and met him. And they are open for business, i.e. foreign investment, not just for the resource sector or the copper mining business, but in general. And I think it's a great place. So I'm not concerned about that at all in Ecuador. The part of that is if you look at the Ecuadorian tax structure, essentially they're our partners. In other words, it's a 50-50 joint venture, if you'd like. 50% of the profit after tax would go to us, and their tax rate would be approximately 50%. So they're a stakeholder. So I think it's a very good structure, and I don't see anything happening like nationalization.
I'm just asking from an investor's perspective or a prospective investor, if you're being taxed at 50%, I mean, isn't that a little bit high? What is the government providing you to warrant that kind of a rate? Yeah.
If you look at our tax bracket, you get your depreciation and all of the tax, international tax standards, international accounting standards. Our taxes, if you look at the royalty and everything else, so we pay about a 50% tax, 50.1, and that's the anyone who works in Ecuador, if you're going to run an extractive industry, you'll pay that tax, but you have corporate deductions, et cetera. So it's a competitive market, and there's surveys out there where at that tax rate, after you look at it in its entirety, it is not that much higher than what you might pay in some other countries. But I think it's key to have a relationship where you don't see issues where people will say, well, we're not getting our fair share. So I think it's in the long term, it's very beneficial to have a fair tax rate so you don't run the risk of nationalization, right?
In one of your investors' presentations, I saw a table comparing your assets versus your peers. You've got considerably more deposits or a higher concentration of deposits than many of your peers who are more richly valued. In other words, just from a deposits perspective, your shares are grossly undervalued. I mean, again, two ways to look at this: great opportunity or value trap. How would you address this?
I think it's a great opportunity. If you look at the size of our deposit, or the pounds of copper in the ground, or the tons of copper in the ground. Now we're not producing yet. It'll be a few years before we're producing, but it's a very, very large and rich deposit. So we're undervalued. If you look at peers that are in the same situation, i.e. not producing copper as well, but we're way undervalued. So I think it's a chance, not a value trap. It's a chance to perhaps rotate out of another investment, whether it be a tech stock or another mining stock, into some companies such as us where we're undervalued.
Is there a reason that you could, ascribe to this undervaluation? Because it is considerable if you use that metric.
Yeah, and I think it's a couple of things. One, our deposits is a mining method that takes a while to get into production, i.e. it's not an open pit mine, it's an underground mine. So it takes a little longer to get it in production. But the positive side of that is once it's in production, it's one of the lowest cost mining methods available, lower than most open pit costs. But so it takes a while to get it into production. So I think people are just looking at that lead time, but every day we get a little closer, we're de-risking the project. But it's, I think, we go back to the supply demand curve. It truly is what I would call a tier one deposit. I think people will recognize that. And
what does that mean for non-mining engineers? What is tier one?
Tier one means world class or best in class. So it's large, it's good, it's consistent. When I say good, high value per unit of rock. In other words, so we have more pounds of copper per ton of rock than most other deposits. So it's more profitable. Your costs we talked about costs around less than $1 a ton, $1 a pound of copper. But we're going to have more copper per ton. So high value. So it's if you look at the size, so it's a porphyry, which means it's very large, very consistent. This mine's going to be in production for generations. In other words, 50, 60 years. So a long, long time.
Why are you planning to take it into production versus selling the assets?
Well, we're going to continue to de-risk it. That's a very good question. So we'll de-risk the asset. And when I say de-risk it, I'm talking about getting permits, environmental permits, right-of-ways, purchase the land that's required for certain facilities over the next year or two, and continue to de-risk it. And if a strategic initiative comes along, and as we continue to de-risk the project, a fully permitted and ready to construct project is a much higher value than one that doesn't have the permits. And so I believe as we continue to de-risk it, I think people will be interested in this project as an opportunity, whether that be a joint venture or some other sort of transaction where they would step in and get involved in this project.
So let's talk about these projects themselves. So Cascabel and Porvenir. So you've got,
Yes.
give us a sense of the scale, the size of the deposits, the grade for each of these.
Well, if you look total, if you add the two together, we contain 4.6 billion tons. So that's 4.6 billion tons of ore. And inside this is both of those deposits. And it has 14.4 million metric tons of copper. So 14.4 million metric tons of copper. And at today's price, we were just talking about, we're at about $9,000 a ton. Well, you can do the math. There's a lot of value in that rock. So 14.4 times million times 9,000. And then we contain 36.6 million ounces of gold. So we have one of the largest gold resources of undeveloped deposits in the world. So when I say large, it's very large, right?
Can you just explain to us how the geology of this of these deposits work? So you have gold and copper. Is gold just a byproduct of your copper deposits, or are they separate deposits just in the same jurisdiction?
It's a byproduct, and so
Okay.
a porphyry by definition is disseminated or fine grained. So the copper is uniformly, copper and gold are associated together with the sulfides, with pyrite or chalcopyrite in our case, and pyrite. And so the gold and copper are together. So higher in our deposits, if you have high value copper, you'll have high value gold. And so, in other words, they're associated. So when you recover the copper, we'll make a concentrate. We also recover the gold. And so they're together, they're joined in both of these deposits. And so they're not separate. It's one process, and you produce a product, copper gold concentrate, that is shipped overseas for final refining.
So what are your plans in the short term and long term to add shareholder value?
Yeah, in the short term, we're working on some non-dilutive financing. I want to say non-diluting, it's not an equity offering. So we're looking at a way, we've got some ideas, and we're working on some non-diluting. We need to strengthen our balance sheet, and that's the short term. And then we would continue to, in particular at Cascabel, I call it de-risk the project and make it more attractive for investors or stakeholders, if you'd like. De-risking by low-cost initiatives, such as obtaining permits. In other words, yes, it does cost money. Nothing's free. You got to spend some time and some legal, but finish the baseline work and get the permit to build the concentrator, for example. So we'll do those low-cost initiatives to de-risk the project. We do not need to do any more drilling on Apollo. It's, Apollo, which is our main deposit at Cascabel. Again, it's over 3 billion tons. We don't need any more ore. We know we have more tonnage, but you've got a generational mine right now. So it's really the de-risking, obtaining permits, and strengthening the balance sheets, number one.
When you say strengthening the balance sheet, what exactly does that mean?
Well, we need to get some cash into the treasury. And so when we have some ideas and we're working on some things, non-equity, so we're not selling stock at these prices, our share price is depressed. We talked about that. And so we're working on that. And over the next few weeks or months, we'll have some proposals that we've announced and work through. So we're diligently working on getting the funds to continue with the de-risking that we just talked about. We also would get a minor amount of funds to continue with, I mentioned earlier to you, not to anyone else, but some of our outside exploration, non-Cascabel related on the tenement. We've got some great targets there that I think will generate some value for shareholders if we can make a discovery and perhaps sell the property, a non-core property, whatever, right?
Yeah. Okay. Just on that note, since you brought up the share price, so I have to bring up the share price currently at 15 cents a share. It was at 60 cents a share 2 years ago. So what happened there?
Yeah, I wasn't with the company 2 years ago. I did own stock, but so I'm thinking, I think that there was a lot of people that thought that there might be a strategic acquisition of the company 2 years ago, i.e., someone was going to buy the company. And that just obviously didn't materialize. Otherwise, we wouldn't be talking. And so, and why, I don't know. I wasn't around, but I think so they got a lot of people got ahead of themselves thinking that someone or some company was going to buy the company. And that didn't materialize. There's a lot of interest in the company. I mean, we have some strategics. It's public record, but I think we de-risk it, and people will get more interested in getting involved with us on a strategic nature, which may be like I say, a joint venture, or it might be earn into the project, or a sale of some or all of the company.
Well, speaking of strategics, I see that BHP owns 10% of the company. Newcrest owns about 10% of the company. Are those the strategics you're referring to?
Yes. So Newmont bought Newcrest, and so they own 10%. And then and BHP owns 10, and BHP's obviously been in the story longer, but Newmont just closed with Newcrest. And so, they're shareholders, and they're strategic shareholders. And then we have a third partner, JCC. Jiangxi Copper owns about 6%. So there's another major company in there. So there's three major companies. And I speak to them on a regular basis, talk about public information only, much like we're talking now, information that all shareholders or investors have access to. And they like the project. They appear to like our new strategy, which is to de-risk it and lower capital attack on how to develop the project. It's a tier one, as we talked before, high value, very large, very consistent deposit, and I think they like the deposit, but they're supportive shareholders.
I'm guessing that when you do go into production at some point in the future, you'll be partnering with some of these strategic partners to actually bring your deposits online, right? Will you be sharing some of the profits? Is that how the arrangement will work?
Yeah, we have any sort of strategic. Yeah, if they were an investor, say a joint venture, obviously they would share part of the risk and part of the profit. They would own a piece of the deposit. As a shareholder, they own a piece of the company, and they benefit from how our shares go up or down. Other stakeholders we have right now, Franco, the royalty company, Franco-Nevada, and Osisko, they have a royalty on the company, so they get a share of the profits over the life of the project. And the government has a royalty as well, and that's in that tax rate I talked about. So those would be strategic partners as well, in my mind.
I'm just curious how a junior would transition into, well, like an explorer, not a junior rather, but an explorer would transition into a producer. Presumably, once you're ready to go into production, you have to invest in new equipment and capital to actually extract the resources. It would be an entirely different process. Would you make that CapEx investment yourself?
Yeah, what we, as I mentioned, we're de-risking now, and so that's permitting, and that's small dollars. But the big capital number, we believe you could finance this through various pieces of we need $1.5 billion. That's a lot of money for a company of our size. So I think you're going to get a strategic partner to help you take this through to production. And whether we're involved on a royalty basis or we own a piece of it, I mean, that's part of what the future will tell us. But we're going to de-risk it, and we have a financing plan. But I think eventually a strategic's going to be involved in this project in a big way.
Does the price of gold, or even copper for that matter, affect the ease at which you acquire financing?
Oh, absolutely. Because when we run our financial models, if the copper price continues to get stronger or rise, we would use a different number there. So then our numbers would show the project, which is very profitable now. I mean, we have a after-tax internal return about 24%, NPV of $3.5 billion, and that's at a copper price of about $3.80 a pound. So if we use today's price of $4.20 or $4.10, whatever it is, it would have a higher NPV, higher cash flow, and it would be easier to finance, right? So,
are you happy with today's prices? In other words, would you go out and fundraise today with today's prices, or would you wait for things to go even higher?
No, we would be
Would you take that risk of waiting, basically?
No, if we, and we're not trying to raise $1.5 billion right now. But at this price, and again, we used a much lower price in our study. This thing would look really strong. I haven't run the numbers. We haven't run the numbers at today's price, $4 a pound, and what so the gold was 2,100. We used 380 and 1750 gold in our financials, $3.80. So, obviously, it would look a lot better with today's spot prices.
Okay. Well, it says in your balance sheet as of last year, you had in June 2023, you have $32 million of cash, correct?
Yes. Yeah.
What are your plans with this cash reserve?
Yeah, and so we've done a great job in controlling and reducing costs, and so right now with that cash reserves, I talk about de-risking. We'll continue to advance permits and approvals with the government, and that's a minimal cost, but it is a cost, right? And then there's legal fees and that sort of thing, and so we'll continue to work with that. And the plan, as I mentioned, is to strengthen the balance sheet in the upcoming weeks and months. And to get the cash balance back up so we can continue to do these de-risking activities.
You had a same time period, you had $449 million of intangible assets. Can you comment on what these intangible assets are?
Sure. Those assets would be the deposits, the capital deployed to make the discovery of the deposits. So if you look at Cascabel, a lot of money was spent on drilling, technical studies, environmental surveys, hydrology. So it would be the technical work required to establish the ore reserve and the resource. But the largest cost would be drilling. So actually, you drill boreholes and you analyze them, assay them for gold and copper, and so that it's the investment made to make the discoveries.
You're a shareholder. Yeah, you mentioned that several times. Can you comment on what percentage of the float you own?
Yeah, I own about 1%, so just under 1%. And if you looked at that, that's just under 20 million shares. And I bought them long. In other words, I bought them. It wasn't options or something like that. And again, I think we're undervalued. And if I was not, I'm in a closed period or a blackout period. When that period ends, I would step into the market. So as soon as that's over, I'll be back into the market, buying on the market.
On that note, let's transition and talk a little bit about you and your professional background. So mining engineer by trade, you've
Yes.
worked several decades in the industry. What was it like transitioning from engineer to executive? I mean, did you have to learn skill sets? Did you have
Yeah,
to?
different skill set. Sometimes I miss engineering, and I guess you warned me don't go too technical, which is where I guess all engineers go. But the transition, I guess, is it wasn't as hard as I would think it would be, but ultimately, I am an operations person, costs and technical things, and so ultimately that's how I try to manage the business, which is be as efficient as we possibly can in everything we do, continuous improvement. So there's still a high degree of engineering discipline, I'll call it, or principles, but I enjoy working with the investment community, and especially when you've got an asset like Cascabel to talk about. I wouldn't have bought stock in the company if I didn't like the asset. I invested in the company in 2016, and I bought stock because I liked Cascabel. I think like I say, it's a very, very good copper deposit. And if you go back at my engineering career, I worked at some of the best. I worked at Freeport, Indonesia, Grasberg. Part of the team that developed that in the block cave mines there in Indonesia. Collahuasi in Chile, northern Chile, another good deposit. Cascabel's right up there. It's a good one, and if you've got a good deposit, you'll make eventually this thing will make a lot of money. So it's you can't change the rocks; they're good. So it's good.
Well, I'm just on that note, the timeline of exploration to production. What milestones do you, as a company, need to achieve before you can definitively say, yes, we're ready to go into production? What else do you need to see here?
Yeah. So the ore reserve is solid. In other words, we're talking Cascabel. We don't need to do any work there. It's obtain our permits, and we believe we'll obtain all the permits to begin construction. And in other words, we think we'll have those in 2 years, so 2 years from now. Now you're dealing with a government, and any government, it's difficult to predict, but certainly everything we've met with the administration, we've talked about it, so we believe we'll achieve these permits in 2 years. So in 2 years, the thing would be de-risk. You would have the right of ways, the permits to begin construction, environmental and other permits required. We have the financial agreements nearly signed, so you'd have the tax structure finalized. We talked a little bit about tax, and we hope to be signing those two agreements in the near term. We signed one just a few weeks ago at the PDAC. We signed an agreement. So did 5 other companies, so a total of 6. And so we talked about the business and what Ecuador is looking like open for business. Well, they're signing agreements that define what your investment, the protection for your investment. So it's permits for us. It's permits, and it's relatively low cost, minimum engineering. You have to do some engineering to get the permits.
If hypothetically, I'm not saying it's going to happen, where it will happen or it should happen, if a strategic partner or an investor offered you 30 cents a share to buy you out today, would you take it?
Ultimately, would I take it? We're talking
would you accept the offer?
30 cents a share for me. I think I would accept that price personally, US, right? But right. Ultimately, it would be the shareholders, right? In other words, if we were to receive some sort of an offer from a viable strategic, we would make a recommendation as a board of directors, but ultimately the shareholders would decide. So as a shareholder at 30 cents a share, I would vote yes. Other shareholders would probably say no. Okay. So.
Okay. All right. Well, that's good insight. Finally, last question. You've in your many, many years working on the field, have you ever had a near-death experience?
Is that including my wife wanting to kill me? Or
I'll let you. Is she watching the
my wife's wanted to kill me several times because of the places she's lived, like the jungle here and the jungle there. But have I ever been very close? Yeah, I've been. I was working in a block cave mine, and it's a safety thing, and no one got injured, but. When you have a lot of rainfall in a block cave mine, so you get a lot of moisture, you can have what they call a wet muck run. It means a mudslide, if you'd like, underground. And I was walking down an extraction level with a friend of mine, and this cut loose, and so you get this wall of mud chasing you. Today, the mines are designed different with much more safety. You don't have people walking around like you did in the old days, but. So it was you were running from a wall of muck and it just stopped, and so stuff like that. But all in all,
running from wild animals or cannibals.
No, like I said, my wife with a knife maybe, but no, nothing like that. It was an act of God, act of nature. But no, all in all, I've been in this business for a long time, and have lived in countless countries and worked all over the world, and have enjoyed it. It's been fun.
Which jurisdiction would you not ever want to work in if you were given the choice of mining somewhere, not going there ever?
Well, it's probably. I'm thinking about where I've worked. Right now, politically, although we had a very good experience there, Russia, right? But because of the Ukrainian thing, everybody's leaving Russia. But I actually, it was a very profitable mine in Far East Russia. But I think Russia would be up there. I have experience with it. But today, I'm not so sure I'd want to go back into Russia because of the politics. But the people and the deposit was wonderful. But so I probably wouldn't go back there. But I've worked all over the world. I'd go back any of Indonesia, Chile, Peru. I'd go back, right? And Ecuador's, like I said, it's open for business. I think it's more and more companies are coming here. So I think it's a good spot.
All right, Scott, fantastic. Thank you very much. Where can we keep up to date on your company?
Sure. You can look at our website, SolGold.com, or press releases come out on a regular basis. And we have, hopefully we'll have another interview with you. And also on social media. We have a Twitter account. So yeah, stay tuned. There's lots going to be happening at SolGold in the next few weeks and months.
Okay, excellent. I appreciate your time. Thank you
Yeah.
very much, Scott.
Thanks so much.
Yeah, we'll speak again next time. And thank you for watching. Stay tuned. And don't forget to follow SolGold and links down below and subscribe.